All right, guys. Sunday focus list for March 14th. So as far as good-looking setups, Eli Lilly here. We talked about this daily squeeze a little bit on Friday. I think this is a good-looking one. So heading into tomorrow's expiration, heading into this week's expiration, we do have open put credit spread with a short strike at 205. So you got a good bullish structure. You got a good-looking 4-hour squeeze here. What I would like to see earlier in the week is, does this 4-hour squeeze finally start to fire to the upside, at which point those puts at 205 should really start taking a beating, all that premium going into our pocket. So that would be ideal for the position that expires Friday. In the event this doesn't necessarily get ripping this week, I think still a good looking setup with a perfect structure. So for, say, an April expiration swing, I still think a really good looking setup. We keep working into Google. So good looking daily squeeze here in Google, holding above that 21. So I continue to sell put credit spreads with short strikes at 2,000 for April expiration. So I love the structure here. Personally, I think Google's going to see higher prices leading into earnings come mid-April. So I'm pretty confident it's not going to fill the gap and be trading under 2,000. So I like me some Google. For a Starbucks here, you do got a good looking daily squeeze. But think about that ideal entry, and the ideal entry is typically going to be at the 21. So not too extended, but I'm a little bit picky. So if we were to get a bit of a dip here on Starbucks back down to the 21, I'd be looking to take an entry, and the same thing goes here for Philip Morris PM. Good looking squeeze, got a good structure, a little bit too far gone. So if it takes off without me, then so be it. If we do get a dip back to the mean, I like that one for a potential entry. Bed Bath & Beyond, BBY, this is actually kind of picture perfect. Stacked moving averages, green 10x bars on weekly, 3-day, and daily. Good looking histogram. So that looks really solid. And if you're a fan of, the GameStops, the AMCs, which, potentially looking like they're going to wake up again here for, call it, the short squeeze round 2. If you're a fan of that kind of thing, I think BBY is a good looking setup. So those are a couple of things we're taking a look at here. Amazon. So for Amazon here, been focusing on selling those call credit spreads over the last couple of weeks to protect the potential losses on the put credit spreads that expire, not only this coming week, but also for the April expiration. So coming into the week here, let's see, we got the put credit spreads and we got short strikes at 3,000. So those are looking all right for now. And then we got some short strikes that are still a little bit underwater at 3150. So, we did our job here on Amazon as far as covering ourselves against that potential risk just by selling call spreads in the opposite direction. And we'll have to see how this week goes. But here's the thing. Once you've done your job, and say you have a bunch of put credit spreads and your max loss is, for conversation's sake, $5,000. If you can kind of take advantage of that short-term weakness and, make a good $3,000, $4,000, maybe even $5,000 trading call credit spreads, you've done a good job there. Now, if, this doesn't end up working out as far as, come this Friday, Amazon's under 3,000, we're taking those potential max losses, then the whole thing's kind of just a big wash, and you did your job as far as hedging. If Amazon can get it going here a little bit this week, and you end up walking away with the profits from the put credit spreads, well, then it's a home run, because you're making the money from the call credit spreads, and then you're pocketing the put credit spread premium. So that would be a thing of beauty. We'll have to see how that goes, but keep in mind, let's push this chart back here a bit. So this is going to be the first witching expiration, quarterly expiration of the year. So if you're a little bit unfamiliar with that, go on ahead and do a Google search. I'm not going to get into that here this evening, but this is going to be the first quarterly expiration. So not always, but typically, you can see a little bit of a total chop fest. So the perfect trade for a choppy market is going to be an iron condor. Now keep in mind, we could explode this week and we could roll over. Looking at the structure of the chart, we're back above the 21, holding above the mean. It looks like a chart that is pretty solid, but one that potentially could just chop back and forth a little bit. So with that being said, with the quarterly expiration taking place here this week, I'm looking at something like this. So if we look at March 19th expiration, let's see. So the market makers are pricing in about a $60 move to, the upside and the downside. So what I would like to do is potentially get an iron condor set up here for Friday's expiration, selling the put strikes and the call strikes a little bit further than $60 out the money. So with the SPX, call it 39.40 here, you could say sell the 40.10 strike calls and then buy the 40.20s as protection. You could say sell the 38.70 puts and buy the 38.60s as protection. And you're looking at almost about a 2-to-1 risk reward ratio. You certainly could, with a bit of a smaller account, set up something like this on the SPY instead of the SPX, but you want to go for the same basic structure. Looking to take advantage of any potential chop this week, selling those short strikes a little bit further out the money than the expected move. So to see the visual here, 40.10 on the call side, it's up above those all-time highs, and then 38.70 is pretty much, let's see, just underneath that 21 period EMA. So, from my point of view, I got a bunch of long positions right now. If this trade goes against me, meaning the market explodes and we're breaking above a brand new all-time high, ripping through that 40.10 short strike, I'm going to be okay with that. I'll take my lick on the iron condor, but my Amazons, my Eli Lillys, the Googles, etc., they should make enough forward progress to completely offset that. So, those are a few things I'm looking at. What's really important as an options trader is taking advantage of what the market has to offer. If you come and kind of force your strategy or your opinion upon the market, that's when things can get a little bit dangerous. So we could explode this week. We could roll over, or potentially, with the quarterly expiration, it could be a total chop fest. If that is the outcome, the iron condor should be pretty sweet. So I hope you had a good weekend. Rest up, and I'll be talking to you soon. Peace.